Good morning, traders. John Caruso coming to you here for the morning of October 20th with your currency outlook for the day. First, we'll take a peek back in the overnight. The big news coming out last night was that the Senate did pass their budget plan, and obviously that is a steady progression towards tax reform. So tax reform could possibly be next. Barring any hiccups from there, it looks like it's smooth sailing as far as stocks are concerned. The stock market's up 0.5% here in the overnight. We're trading about 2570 on the S&P 500. We are going to have some resistance, probably up around 2580 to 2590, up in that zone. So keep that in mind. Looking at the dollar's rocking higher right now. It's up 33 points again. That's kind of drafting support off of the Senate passing its budget. So right now you got interest rates higher, you've got the dollar higher, you've got the Fed DC rate hike odds sitting at 92%. We're trading about 93.60 in the cash market for the U.S. dollar, once again up 33 points. I do think the dollar is kind of largely trapped between 94 and 93 over the past couple of weeks. I think what they're waiting for, this is another big event coming down the pipe, that's next week, next Thursday, is the ECB meeting, and what are they going to do as far as trimming back their quantitative easing. I've heard both sides. I've heard they could leave it intact for the time being, and I've also heard that they could cut it to 30 billion in sovereign debt purchases a month, but extend it out for another year. So we're keeping our ear to the ground. That's coming out next Thursday, so we got to watch for that. Hitting on the euro, we're trading 118.26.5, trading down 39. Once again, much like the dollar, the euro's been trapped in a sideways range, largely looking for its next breakout, either to the upside or to the downside, coming from the ECB next Thursday. The thing about Europe right now is Northern Europe looks excellent. The German economy, German GDP is accelerating. German inflation seems to be picking up as well. We did see a beat on their PPI numbers in the overnight. However, Southern Europe looks disastrous right now. Italian banks are struggling at the moment, and we're also hearing there's a lot of noise coming out of Spain and Catalonia, and there's more that could develop on that front. And I think that's best to assume that more chaos could come out of that Spain and Catalonia ordeal. So once again, ECB on Thursday, that's going to be very important. I'm going to hit on the Canadian dollar. The Canadian dollar is the biggest loser here today. It's down 70 points, trading at 79.42. So a big failure on the chart as it failed to push above 80.40 in the last few trading sessions. We have the one thing about the Canadian, we've heard a lot of hawkish dialogue coming out of the Bank of Canada in recent weeks, kind of steering and preparing the market for an interest rate hike. However, this morning we did see a big drop in Canadian retail sales, and we also saw a miss on their consumer price index. The consumer price index missed by 10 basis points. So whether or not that's going to deter any interest rate talk and hawkish dialogue from the BOC moving forward, I think it's probably safe to assume that that's going to be the case. But the wild card, of course, for all the currency markets is going to be Thursday's ECB report. I really can't stress that enough. So we'll look forward to that. Feel free to reach out to me at the desk if you have any other questions on some of the other foreign currencies. I'm around all day. Once again, I'm John Caruso. Thank you for tuning in.